Dear students, today we're going to look at how the Federal Reserve works. It's very exciting because they are the ones with the biggest stick in the world. Do you know why? Because they can buy and sell bonds, and they have a printing machine. Yeah, it can print money. If you print money, that's probably illegal, okay? So we're going to learn all about it and how it affects us in our economical world. Okay, it's going to be fun. See you. This video will cover the Federal Reserve Bank. A Federal Reserve Bank is a regional bank of the Federal Reserve System, also known as the central banking system of the United States. In the United States, there are 12 Federal Reserve Districts, one for each of the 12 Federal Reserve Districts that was created by the Federal Reserve Act in 1913. Some of the tools that the Federal Reserve Bank has at its disposals are the ability to communicate, and they do that through the Federal Reserve's Beige book that comes out almost on a bi-monthly basis. They can also change the interest rate, and that's the interest rate that banks are charging each other and when they borrow money from the Federal Reserve. So when member banks borrow money from the Federal Reserve. Open market activities such as buying and selling bonds. They can also print money, and very seldom do they ever change the reserve requirement. That's how much cash a bank needs to have in reserves to avoid the run of the bank. During the financial crisis of 2008, the Federal Reserve added trillions of dollars into the economy during something they called quantitative easing. They called it quantitative easing, or QE1, and then it was nicknamed QE2 and 3, and then they changed the name to it to twist, tampering, stealth, and the idea was that they wanted to create enough inflation, perfect inflation, to increase the value of real estate, other assets such as securities, and make people feel like they were richer and therefore jumpstart the economy and have people consume and gainfully employed. Now, by artificially creating inflation this way and printing money to buy bonds, which means that you get more cash out to society, you would expect interest rates to change. And yes, it did. So when they announced it, the yields was going down, and then they started pumping out cash, and yields went up, and then they stopped, and it kind of hovered, and then it started dropping down again, and then they printed more money to push the economy up. A very good hedge against printing money is buying stocks, because typically it's inflation protected. Another part that the Federal Reserve Bank can engage in is buying and selling foreign currency. And that means that they exchange US dollars for other reserve currencies like the British pound, the euro, Japanese yen, Canadian dollars, and so on. And when it comes to the foreign exchange market, it is open 365 days a year, 24 hours a day. It's the largest market in the world. Long term, when it comes to the foreign exchange market, is 10 minutes, okay? Now, Federal Reserve Bank will look for arbitrage opportunities, and that way keeping the currency prices rational and stable. And when they look for opportunities, they typically try to calculate the valuation of different currencies, multiple currencies, several times a second. And if they find any type of arbitrage opportunities, typically immediately disappears, but they would find it many digits out. That's something we can't, as normal people, do. Another part when it comes to what the Federal Reserve Bank does is paying attention to certain rules and making sure that there's nothing that's really going wrong in the economy when it comes to money. So one thing that they look at is interest rate parity,
which is an arbitrage condition that must be held when international financial markets are stable and rational. And that means that if the current the law of one price, if the currency of $1 equals euro 50, and that's is what the price should be, there shouldn't be a mismatch where the euro should be a euro 53. That has gone away, because then it would mean that if you exchange euros for British pounds and British pounds to US dollars and back to euros, they could get a risk-free rate of return, and that could not happen. Or if they did it from euros, dollars, pounds, euros, and that way if there's a gain. So if you go calculate the right way, you'll make money. If you calculate the wrong way, you lose money. And they do that, and that cannot be held true. So that has to, you can't have that. Another purchasing power parity is the exchange rate between currencies of two countries should be equal to the ratio of the country's price levels. That means that if you have a trade balance that is not even, so like China's exporting more stuff to the United States and they're getting a bunch of cash, eventually all that cash has to flow back to the United States through consumption from the Chinese of U.S. goods and services, or investments, foreign direct investments. And so the price levels will fluctuate up and down in between the two nations. Now, the Fisher effect is an increase, alternatively a decrease, in the expected inflation rate in a country will cause a proportionate increase, alternatively a decrease, in the interest rate in that country. Inflation is up in the United States, but the Federal Reserve is artificially keeping it low. That does happen. In China, they might have the same thing, where their federal government might artificially keep their currency and inflation intact with because they have a surplus in their economy. Now, what typically then happens over time is that if investors are unwilling to lend to the United States, then it will force the interest rates to go up. Okay, and that's what happens. Now, China has been able to do that in a different way, mainly because the Chinese is not free flowing their currency. Okay, so that makes it impossible to actually influence in that way. The government there is in total control of their monetary policy. Now, what would happen if they would free flow their currency? It would probably end up being too expensive to manufacture products in China, in which businesses will leave China and start manufacturing in other countries, like maybe Vietnam or Philippines or Australia. Now, a report that you guys should all look at different times is the Federal Reserve Bank. Their Beige book is a summary and a commentary of all the economic conditions in the United States based on every different sector we have. And they might have statements like this one right here. Overall, most districts reported that loan demand grew, credit quality improved, or loan delinquencies fell, with credit standards changing very little. Districts reported that agriculture sectors weakened overall and farm incomes were stressed. Blah, 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 blah. So it describes exactly what happened in different areas, in different Federal Reserve districts. So yes, it looks at the United States of America, but then also splits America up into 12 different parts and describe how are we doing. I recommend that you go to the Federal Reserve Bank and read all the information that they have. You can use their Beige book, for example, as a part of your SWOT analysis for business plans. Or look at how they're communicating things and how you want to incorporate that in maybe a essay that you have for a finance or accounting class. So, when it comes to about the Federal Reserve, they will describe how they meet, how they do business, how they make decisions. They have lots of information on news, research that they provide as a service to the United States of America, to all the actors that are actively doing business here. We can also look at what their monetary policy is and what it means for them to be active and why they're doing things and historical things. They might have different parts of what they do when it comes to regulation. They help out with payments, economic research, and here's where you can find lots of good data that you might want to pay attention to. Now, their database is insane and it has so much stuff available for you, and I can't urge you enough to take a look at it to support your research in so many different areas that you do in the School of Business. You can look at what consumers and other parts are doing. Here's an example of the Federal Reserve Beige Book, and here you have all the different Federal Reserve districts, and naturally Alaska and Hawaii is lifted out to the side of the map. So the state of Wisconsin is a part of the Chicago district over here. And because in 1913, when this was all drafted up, this whole area here was very small. There was barely any people living there. And that's why it ended up being so big. Their national summary describes exactly what's going on in the United States. In this case, they're talking about the effects on payrolls and stuff like that in regards to COVID-19 and the pandemic effects that many companies will struggle with. They will also have key items that are specific for the different districts as a national summary, and then they go in and go into great lengths describing the different districts and how they are performing and what their biggest challenges and opportunities are. So if you want to learn more about how the Federal Reserve works, go to their website, federalreserve.gov, and you'll find out how the Federal Reserve works, their key entities, such as the Board of Governors, the 12 Reserve Banks, the Open Market Committees, and also some of the other functions that they have, which it comes to conducting a national monetary policy, help maintain stability, supervising regulations, and fostering payment settlements between consumers and producers. So, and also promoting a safe environment to do business.
Dear students, I hope you enjoyed this video. If you did, give me a and like the page. That way all of these followers like you will get the latest and greatest of my uploads. Not only that, at some point you can help me help you by having a much nicer URL, instead of having that really weird one that you can't really remember anyway. So if you do that, I will be really, really thankful, and I'm here for you, okay? So help me help you do better in life. Thank you very much.